Robb from the Livestock Marketing Information Center is our cattle market analyst this week. When we were at this open house a year ago, it was towards the end of a brutally long and expensive summer for farmers and ranchers. A short corn harvest and the previous drought in Texas didn't help either. Now pastures are in better shape and a potentially record-setting fall harvest could be on the horizon. But the losses this cattle industry has sustained are impossible to ignore.
Well, it's kind of difficult. We have a great diversity in the U.S. industry. Prior to this most recent drought, though, we had estimated per cow returns would be about $135 per cow. That's return over cash costs plus renting pasture, so not including all costs of production. That number translated in after this most recent drought to about $35 per head. So we lost well over $100, $130 per cow of our income earning potential due to the higher costs in a drought year, and because we had in the most recent drought year low corn crop and high corn prices, our cost of production also went up. So we kind of had the worst of both worlds and the biggest economic impact because our cost of production went up in the drought and our calf prices went down.
What does it look like going forward for the feedlot and for the cow-calf producer? Does it look like it gets any better here?
I think it certainly does, and we never know what Mother Nature's going to dish out. But if we have a normal year, our costs of production in cow-calf country are going to go down, and certainly our prices of calves are going to go higher. The supply side is very supportive of higher calf prices, and the consumer still looks rather favorably on beef, even though we're going to get a lot of competition from pork and chicken. So the cow-calf sector set pretty well. It's going to be a struggle to recover from 2 tough years, much of the country of drought. On the feedlot side, we're still in sort of the throes of 2 years of consecutive, almost monthly losses, one after the next. A year ago at this time on closeouts, our estimates would put the per head closeout on a cash basis, losing nearly $300 per steer. Now we're losing $50 to $60 per steer. We're certainly towards the mend, but these feedlots have been very aggressive in chasing the calf and yearling market. Even though their corn costs are starting to move lower, they've started to bid that away pretty quickly. So the cattle feeding sector seems to be not, in a bit of a transition point of time and not really out of the woods yet.
The corn is kind of the wild card. If everything goes well, it could be a record crop, but if there's an early frost across a widespread portion of the Midwest, this could really get ugly. So do you have any advice for...
Well, certainly we're looking at a much bigger corn crop than last year. Where we have the frost worries start in parts of Iowa. They're poor corn in parts of Iowa into states like North Dakota. The eastern corn belt, we've already made the crop. But there's still a lot of yield potential out there that could happen either plus or minus this year, and that'll be important to how the prices finally set out. And that's really important for the livestock sector because that cost of feedstuffs is usually the largest component of cost of production.
Still see something in that $4 range?
I think we'll have $4 on an annual average, and we could push, if we do get a late frost, we can push corn in the cash market, in some of these cash markets, into the high 3s. So that's a real dramatic change from the last 2 or 3 years.
I think we talked about this last year, but you mentioned it again in your presentation today. Consumer consumption continues to go down. At what point does that become a concern?
Well, consumption, to an economist, consumption's a big part of the story. That's about half the demand story, because demand is also the price the consumer is willing to pay. That consumption keeps going down, largely just reflecting smaller production and bigger exports in the U.S. We're still a pretty big beef eating country, but we look ahead to next year, 2014, and U.S. pork production will outpace beef production for really the first time in relevant history. So it's a concern as we look ahead. I think we know a lot of the reason why consumption went down, simply because our production went down. The question becomes, in the long term, can we get beef prices high enough? Will the U.S. economy grow fast enough that we can take beef prices even higher and add some profitability to the beef sector? That's really the major unknown looking ahead, is how fast the U.S. economy grows will drive that demand for beef component. If
it doesn't, does that push consumers to other meats like pork and chicken?
It certainly does. The pork and chicken, especially the chicken sectors, are already ramping up aggressively, and there's going to be a lot more competition at the meat case, and especially in the second half of 2014. And again, if the U.S. economy is growing, consumers will sort of stick with beef. But if we start to stumble, they're going to have a pretty big incentive to move to pork and chicken.
The last numbers we have from the USDA on cattle are at the beginning of January of this year. The next ones we'll see at the beginning of next year, since there was no mid-year report. What's an educated guess as to what you might see for the state of the industry?
State of the industry today is that the cattle inventory is down from a year ago. Our estimates, because again, as you mentioned, USDA did not do a report. We take this forward through the end of the year, even with a pull down in beef cow slaughter. We'll have a year-to-year decline in the size of the U.S. beef cow herd as of January 1, 2014, and probably a decline in the total cattle population. And we'll probably start to try to hold back heifers again this year as we have the last 2 years, try to stabilize that process. But the cards are largely already dealt, and the beef cow inventory on January 1 will be smaller, probably on the order of 0.5 to 1% smaller year to year.